Hello everybody, my name is Lush Eisner and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. This is my thoughts on market happenings for the week ending June 24th, 2022. Looking at the stock indexes for the week, the TSX, Russell 2000, S&P 500, NASDAQ, and the Dow Jones Industrial Average were all up after a solid week. Oil and gold were down for the week, however. Oil, in fact, has dropped 20% since its peak and is now in a bear market. Some strategists say that any bounce in the stock market could be the prelude to a sell-off in mid-July once earnings seasons begin. Earnings are expected to be increasing at a lower rate than previously for Q2. On Wednesday, the major headwind for the Canadian equities remained inflation. CPI data on Wednesday came out at 7.7% year over year for May, representing a 39-year high for inflation, which is concerning. Equities reacted negatively to this news and opened significantly lower on Wednesday morning. With no indication of inflation having peaked, the market outlook remains bearish. This opens the doors for Bank of Canada to pursue a more aggressive rate hiking policy. The TSX recovered most of its losses on Wednesday, however, and took the high inflation in stride. There is an almost 0.75% interest rate hike priced into the bond market for the July Bank of Canada meeting. The bond market has high yields and rising for corporate bonds as well. Looking at the Bank of Canada strategy and goals, it will choose to have a recession rather than high inflation all of the time, because a recession in the country will eventually be something that Canada will climb out of, while a high inflation would look like back in the 1970s. A 0.75% rate hike is on the table for July, but a 1% rate hike would be panicking. It's expected both sides of the border will increase their interest rates by about another 2% by the time the central banks are done raising rates, getting the interest rates approximately to 3.5%. A recession would impact Canadian big banks in a serious way, lowering their earnings potential by as much as 16%, an analyst says. Hitting BNS and CIBC the most, especially if the banks have to refund their loan loss provisions. This is why the banks have been going down recently. The US dollar is getting stronger. It's up 2.5 cents in the last 2 weeks compared to the Canadian dollar. This has been due to the US Fed hiking rates a lot, which makes people all over the world want to put their money in US banks to get more interest. And therefore, they have been converting their money to USD and bidding it up. The stronger US dollar is also causing problems the world over because a lot of international loans are in USD, as are a lot of commodities, causing them to be more expensive to other countries. Europe is looking at serious gas and gasoline shortages this summer, with rationing and lotteries being suggested as Russia shuts off the flow of oil and gas entirely. There is no short-term way to increase the world production of oil. China is lowering interest rates, trying to stimulate their economy. They are in a different place in their business cycle than the rest of the world, and there are political reasons as well, as because the Chinese government plenum meeting is on later this year, and it is important that the economy is running well. There is growth expected in the Chinese stock market as these measures take hold. Ignoring the world's second largest economy is not recommended. China has the least likelihood of a recession at this point, while Europe has the greatest, and possibly already in a recession thanks to the high energy prices. Canada and the US are in between those two, with the US being less likely than Canada to have a recession due to their strong jobs market. Looking at next week, on Monday, Nike reports, and Alimentation, Couche-Tard and Shaw report on Tuesday. Next week's economic events, well, on Wednesday, the US reports its GDP, which is going to be an important number. Thursday is an OPEC meeting about production, and Canada reports its month-over-month GDP as well. If you have any requests on what you would like me to cover in future videos, please put that into the comment section. Please like, subscribe, ring the notification bell, and may you have a profitable day.